The numbers are in, and the excitement you're seeing on other media outlets may not be completely the reality of the situation. We're going to talk about all of that and more on today's episode of Money Never Sleeps. Welcome back, everybody. It's been a fun day in the market so far. As we get going, once again, as a reminder, hit those buttons down below. A like, a comment, subscribing to our channel, all that good stuff. Share it out on social. It means a ton. Nothing Kevin or I say is financial advice. We're not financial advisors. We're you guys who love this game that we're playing here. But please do your own research before making any buys or sells. Kev, we started the day bright and early with the CPI print. Everything came in pretty much at expectations. I'll dive a little bit deeper into the numbers here in a second, but what were your initial thoughts when you saw it?
Yeah, absolutely. I didn't get an ounce of sleep last night because I expected there'd be a lot more volatility. Clearly, we haven't seen that, but more so in TradFi. But yeah, I was waiting this morning. I saw the numbers, and instantly, I thought it was better than I was anticipating at first. But then I realized everyone was lying to ourselves and saying it came in under expectations, like it was good news. Inflation went up, guys. It shot up, and then I looked at the CPI report and I saw exactly in what areas it went up, and I'm like, this doesn't seem good. This doesn't seem like a good look for at least the Fed, as they are data dependent moving into obviously another month of CPI reading that we're going to get for August before they meet again. So personally, I think this was an absolute hot, sticky reading, and it's probably foreshadowing something worse that's going to be coming for August, based on what we've seen. A lot of the data that was within that CPI data come back as more of the hotter areas that have increased since the previous months.
Yeah, I completely agree. As we get going, good to see everybody. Randy, good morning, sir. Mr. House, as always. Ace, good to see you, buddy. Once again, hit that like button. But let's get into the numbers a little bit, and then we can kind of dissect it a little bit more after that. We saw on the headline numbers 0.2% increase month over month. That came in at expectation, same as last month. Year over year, it came in 3.2%. That was slightly under the expectation of 3.3, but a little bit higher than last month's 3%. The biggest increases in the headline CPI readings were food away from home at 7.1% increase year over year, and food at home 3.6. So food, like that 7.1 number, eating out, we need to look at that and look at some of the restaurant chains that could be most impacted by it, because people are gonna, if it's getting that much more expensive, like it's fucking expensive to eat out, man. We talked about it with like Chipotle when they did their earnings. Oh, yeah. It's ridiculous. So we'll talk about that. Maybe try to find some stocks that we think are going to get hit in the coming months once that number begins to stop people from eating out. The biggest decreases in the headline CPI data was in energy. And we've talked a ton on here about oil, about the fact that oil saw a huge drop over the last 15 months. I think I was looking at the numbers over the last 15 or 16 months, 10 of them were in the red. One of those months that was green was like that much green. So there's been so much downward pressure on oil, and we're starting to see it come back up with the issues with OPEC and Russia. That number is going to bounce back. That energy number will bounce back for sure. And we're going to see that impacting the August print, the September print. And if that drives the headline number back up, everyone's been talking about the headline number like it's this great thing. The Fed doesn't really care about it as much. So let's get into the core number. That was a 0.2% increase month over month at expectation, same as previous month. 4.7% year over year. That was at expectation, down a tenth of a point from 4.8 previously. 4.7% on core. That's still more than double of what the Fed is saying their mandate is. That's crazy high.
It's moved.
It's stuck. We've seen it with PCE. PCE finally moved last month, a sizable amount, but we're still seeing core CPI just in this unbelievably high range. And, it was interesting. The probability for a Fed rate pause increased today from 86.5% to 88.5%. So these futures bettors are saying that, this is good enough for the Fed to give it a pause. Now, we have another CPI print that we'll get in September before the next Fed meeting, and that could all change if we see it go back up. If we look at the biggest increases on core, it was transportation services, 9% increase year over year, and then shelter still going up. Dude, the shelter numbers, we've talked about this before as well, like 7.7% year over year. That's fucking nuts. Like, let's look at this too in the world of, you know, how people are spending their money, right? Like, food is more expensive. Like, the main things that people need are more expensive. This is going to continue to cut into discretionary spending. I don't care what people say about the fact that, like, oh, well, yeah, credit card debt's at an all-time high, but people have more in their savings accounts. Like, not for long they don't. Not the way this shit's going. So, to me, like, this isn't anything to get excited about, in my opinion. We are going to see – I think we're going to see a reacceleration. There are plenty of people who don't want to believe that and who are going to say that we're wrong, and that's fine. The numbers will bear out over the coming months. But this, to me, is not a good sign. It is not an indication that we are anywhere near out of the woods or that the Fed can afford to take their foot off the gas. We are not anywhere close to discussing a pivot and taking rates down. Like, get those fucking words out of your mouth. Maybe maybe a year from now you can come talk to me about it. But for the time being, the Fed still has to be on the offensive here because these are not great numbers. And I don't know what it's going to take to start to bring some of this shit, like the shit that really matters, bring it down.
Yeah, this reading comes at kind of an inconvenient time for the Fed and a lot of investors, right? We don't have another FOMC meeting until September where they're going to decide whether they want to raise rates or not. And we have another CPI print that's coming, you know, for August, right? So we're going to have 2 months worth of CPI data. And we've said that core CPI has barely moved. And I actually retweeted something that Peter Schiff said today. He believes that core CPI is bottomed. In other words, he anticipates that we're going to start seeing an acceleration. There's a reasoning why it hasn't moved down much more. It's mainly because it's about to take off once again. And I honestly believe that. I do believe that we are going to see, you know, acceleration of, you know, inflation. We're going to see a spike. It's only natural. Again, this is something that Michael Burry has also been talking about. He talked about it over a year ago when they were starting to drop 75 basis points, right? So we're in a really weird time where investors are still really optimistic and they're kind of pricing in that these rate cuts are coming, that they're on the way because they keep looking at the headline number. And again, we're looking at expectations. These expectations really mean nothing. These are artificial, you know, assumptions that we're anticipating that the data is going to come in at. You know, we could make these numbers up the night before after we get the reading from the Fed itself, right? The expectations mean nothing. It's the data that we're looking at. That's the most important thing. And
it means something on the day-to-day basis of whether or not it comes, like what the market has priced in. If you're trading the market regularly, the expectations matter from that standpoint. But I do get what you're saying.
Yeah, exactly. It's not, when we look at it in form of true data, it's not important as to what the data actually is. That's I think that's what I was trying to say. But yeah, I'm looking at this and I'm looking at how the markets reacted. We saw the Dow shoot up instantly, and then next thing you know, it retraced all the way down, and now it's up again. I think that we're seeing a lot of volatility. A lot of people aren't sure of what to make of this. And I think that going into September, if we do get, you know, a really bad print because energy starts going up, which we are already seeing, and that's going to be accounted for in the August CPI, you know, I think that this is going to be a pretty sticky place for a lot of investors, and the Fed is just going to have a harder battle now, I think, ahead. This is not necessarily a good place for it to be peaking.
I don't envy the Fed right now. Like, no, I look at this shelter number, and I just have to wonder, what is it going to take? Because that is such a huge part of, you know, such a huge percentage of people's monthly expense. You know, monthly expenses is going to be their shelter. And with how low the supply on housing is, like, it is, you know, landlords can charge what they want. Like, mortgages are higher than rents. So landlords can keep going up. There's a low supply. People don't want to buy and move because if they're locked into a mortgage, you know, that is sub 3, sub 4, sub 5%, they don't want to take on an all-time, you know, the highest mortgage rate we've seen since 2001. So, like, they've kind of put themselves in this corner where they've grinded the housing market, at least the activity in it, to damn near a halt. And to get that shelter number down, we need more people to be willing to buy and move. And that's not going to happen until the rates come down, but they can't lower the rates because of inflation. So it's just like, what the fuck are they going to do? Like,
they have to break
Powell
something.
Is either going to, yeah, like something has to, and like to break something, guess what they have to do?
Raise rates.
Fucking raise rates again. Like, and that seems to be the only solution at this point. I don't know what it is. They have, like, the longer this drags on, the more violent that movement is going to be.
Yeah, and again, I think this is the problem that a lot of people have when we talk about this soft landing. There's only been one soft landing, I think, that a lot of people agree on. That was back in the 90s that actually worked. But for where we are and the amount of shit that we had on our plate that we're fighting going into, 2023, 2022 into 2023, especially now going into 2024, something's got to break, guys. I'm sorry. You can't just say that the economy's doing okay. You can say that technically. You can say that we're in a vibe session, but it just seems like we're going into something absolutely.
You want to get me fumed here, don't you, by saying that fucking word?
But yeah, it's absolutely insane to think that something won't give at this point, right? There's just too much shit that's going on. And again, we're talking about everything from the global perspective to what's going on here, what's going on with just consumers themselves. We're talking about energy, everything, and even the market itself. The market is not the economy. So the market eventually is going to probably diverge from the sentiment that we are seeing from at least the headlines and stuff like that. I personally looked at the charts last night and I looked at them today. And I said that if we did see a sell-off early in the day, I think that the top of the market for TradFi has been put in, at least for the major indexes. That's my, that's my conviction statement. I'll go with that. If it hasn't been put in, it'll be put in this month of August. But I think that September and October, that's when we start to see, the decline. And a lot of that might just be because we're starting to see CPI get a lot stickier, and then it's going to force the Fed's hand to do something. And likely that's going to be to raise rates and then have a hawkish stance going into 2024.
Yeah, real quick for Randy, Mr. House, and Ace. Based on what we know today, what would you do if you were a voting member of the Fed? Would you, drop it in the comment what you would do. Would you raise it? How much? Would you stand pat there? I'm just curious, like, what people besides Kevin and I think about this one. But yeah, I do agree with you that I think a lot of the numbers here, the top has been put in. We're seeing Apple, there's a huge celebration when Apple crossed a 3 trillion market cap. That's down to 2.79 trillion now. We saw that NVIDIA hit that all-time high, 482. They're down to like 425. We've seen Tesla continue to get beat up with their CFO leaving. They put in a really good number at about 297. So not quite that 300 number. It's coming down as well. So it wouldn't surprise me if we saw the local tops already put in, and we're going to continue to kind of grind down until something does break, and then we finally, this market gets its teeth kicked in like it needs.
Oh yeah, absolutely. And again, I think the volatility that we're seeing here at the top, as soon as it gets bought up, it gets sold off, right? And then people will buy it up again. I think this is, if anything, distribution. This is people who are maybe getting in a little bit too late, hoping that, it's going to shoot up more. But at the same time, I think a lot of people are also looking at it. I saw JP Morgan's Kelly. He was talking today, and he said that he thinks that investors should stay in the stock market despite the ebbs and flows of, CPI data, which in other words is just, exit liquidity, stay put. We're gonna take the rug from underneath you, and good luck in the next 10 years. But that's where I think we are. I think we're at that point. And again,
Randy wants to. I'm guessing when he says bring it down, I'm guessing he wants to take it up another half point, which, you know what? Let's get real weird with it, Randy.
Let's do you guys know I wanted to do like an 8-point hike, and I'm talking about 800 basis points. I would have inflation done in like a month. I mean that from the bottom of my heart.
I haven't done it in a month. Yeah, I think there's a reason why you and I aren't voting on the Fed. It'd be a lot more fun if you and I were on the Fed, though. Let's just be real. If we were voting members there, I'm saying, dude, send me out there to do Jay Powell's speech. Like, come on. It'll be way more fun.
But
I'll be out there
talking.
Harker and barking. I'll be talking shit to everyone. And, like, when someone has a stupid question, I'm going to tell them it was a stupid question. When someone makes a comment about my tie color, I'm going to tell them to fuck off and get out of the room. Like, it'd be so much better. Anywho, let's get back to the topic at hand.
Yeah.
What were we saying?
We were talking about what people would do if they were voting members of the Fed. And then Randy said another half point up. So
let it bleed.
Let it bleed.
I like that. I like it, Randy.
Great album.
I like it. Great album. You're goddamn right it is. Okay. We're getting ready to wrap up the trading day. 45 minutes left before the markets close. We're kind of like, it's been, there was movement earlier, like you said. It ripped and then it dipped, and now we were just kind of stuck in this place. Crypto is just
pulling teeth, right?
it is
terrible.
It is a snail moving sideways. You and I were talking before the show. We looked back, and I think we're at this place in the market similar to like June, July of 2019. And if that's the case, we still have like a 70% drop that is possible out there, and that would bring us kind of close to your target as well. So let's look at that real quick. Let's do that quick zoom out, because yes, there are bullish indications for the long term of crypto. And I don't think this is the last crypto cycle we're going to see, as opposed to like some people who are like, I think, starting to capitulate a little bit and saying it's the last crypto cycle. But I do think we're going to see it kind of grind for a while, because people are, people are going to be hurting for money. So let's kind of go and look at the pattern that we saw previously and where we're at now.
Absolutely. So this is where we are now. We have to zoom in if we want to look at that pattern back in the June, July of 2019. And let's go in on the monthly. And that would put us right around here. This is June 2019. And here's July of 2019, right? And this is probably, even if you look at this move to the upside before and then, the push up there, this is where it would place us. And let's do the ruler. Let's grab it from the top to the bottom, which the bottom was put in around March 2020. COVID, you're welcome. That's a 76% drop. Pretty insane drop, right? It goes to show you that, hey, everything comes back after, these bad drops. Obviously, there's another cycle. It's going to push up. But if we didn't have that, push from 2020 to 2021, then you wouldn't think that this would come back, right? And it's probably possible that we're going to push down very similarly in this fashion. I think that my targets, along with what you brought up, pointing at this, line up pretty well, right? 70. Let's do it real quick. 76% from where we currently are. That would put us roughly, I think, in the 500s. Which for ETH, I am sticking in the 600s personally. Let's see, 76% puts us at. Actually puts us a little bit lower. Puts us at about 441. Let's say 70%. Let's not be 70%, $546. I could see a wick down there. Okay. It doesn't seem real or reasonable right now, but I definitely think that this is possible given the macro structure that we're putting in. If you look at the volumes compared to the stochastic RSI and how the price actually has been moving here on the monthly, something's got to give. I think that we are actually seeing a lot of money absolutely just exit the space. One example of that might be, Base, that entire blockchain. They're anticipating a lot of money flowing in. And then on the first day, I believe it was only $10 million that flowed into the blockchain itself. So, a little bit of a disappointment there. So keep an eye on that. But that shows you that, there's a lot of money that just doesn't want to be risk on right now. And there is a lot of money that just absolutely wants to buy Hex and Curve. People are wild out there, but people that are wild are going to help us bring this price down all the way, because they're going to buy it every time it drops. And then when it starts dropping and they start getting liquidated or getting close to that margin call, next thing you know, they're going to sell out of fear and make sure that they have some capital before it's going to be a spiral to the point where we're down in that 70% range, right? So yeah, looking at this compared to where we were prior, it's very possible that we see this. And again, look at the exponential growth that we got after that. I mean, it's absolutely insane. Maybe the Fed does print, I don't know, even more money than they did in 2020. Anything's possible, guys, especially for a failing nation towards the end. Ray Dalio. But looking at this right here, I think that this monthly, we've been shooting up and we're starting to see the tail end of it kind of go red. We haven't seen red for a while prior to that. I think our first red month was actually in July, and we got a red month right now. I think that the monthly stochastic RSI is still going to go up a little bit more. I believe right now that we are currently at 91 and 76. I think we're probably going to just kind of plateau up here, going to get into the completely overbought territory. And that could set us up for the next, 6-7 months of just absolute downward price action. I think I truly believe that. ETH is in a really weird state right now, where at the weekly, it looks like it's coming down pretty significantly. Like it hasn't been overbought. And if it has been overbought, it hasn't come down enough to the point where it's like, okay, this is breaking this range. No, it's been in this range for a pretty good amount of time, between 800 and 1800 and 1900. It's just like anytime it gets close to 1800, it goes right back to 1850. Then we get a little pump, shoots up to like 1920, 1930, goes back to the 1800s. It's pretty boring range. If you're, you could be making money trading it, but it hasn't been fun. We need to see something with ETH, and I think that this is going to go in line a lot with Bitcoin down and shooting up, where we start to see that ETH BTC chart start to bleed, and turn, ETH probably is going to go down with it. So let me just pull up the ETH BTC chart real quick, because I think that's also really important. We don't talk about it often, but if we look at this on Binance, we can see that it's just been putting in lower lows and this entire time, right? And it looks like on its way on the weekly to this 200 EMA. We could see a point where we start to lose some of that major support, and if we lose that major support, which is down here below the 200 EMA, we could probably fill a little bit of this gap. This could be down here. It should be absolutely insane. It's kind of hard to tell you the value of that, because it would be in Satoshis, not necessarily USD. But I think that there are gaps on this chart where, Bitcoin dominance is just going to be superior to ETH and superior to a lot of all their other altcoins, where we're able to see those 70% drops on the USD pairings. So the fact that this has been the chart for a while now, and it looks like it's coming down, I don't necessarily believe that Bitcoin dominance is going to go lower than where it currently is, below 50%. I think that it's going to be honestly up only from here. Even if the price itself goes down, just there's going to be less money in the market. I think that it's very possible that these pairings, absolutely tank, because ETH dominance just goes from, I think, at 18% where it currently is right now, could go down a lot lower. So keep an eye on that. Obviously Bitcoin dominance is everything, but it is part of the reason why we could see, some of those 70% moves for a lot of altcoins. Ethereum is not excluded from that list whatsoever.
Okay. We've talked about crypto. Let's look real quick, just for shits and giggles.
VIX.
Let's look at WeWork. No, let's look at WeWork real quick, just for funsies. Like, I'm
mad about this one.
Here.
I'm so mad about this one, because I was kind of being semi-serious. I was like, maybe I will put like $1,000 into it. Who cares? And fucking shoots up like crazy. But also, I wasn't going to do it.
This is 100% over the last 24 hours.
125%. Insane. Look at this. It's 105 right now, but this is what we're talking about. We were actually talking about, it was like 14 cents, I think, yesterday or something like that. Someone had a good idea today. They squeezed it. They shot it straight up, went all the way up to 32.57.
This looks like when Terra Luna collapsed and it got near zero, and people were like, it can't go any lower, and then they bought some, and then it went right back down the next day.
Guess who did that?
Who did that?
I did. So, and I bought it almost at the complete bottom, but it just they kept on printing so many coins. If I had bought it literally like maybe 2-3 hours later, I would have made like $60,000 off like $1,000 investment. But instead, I ended up with $300 and I sold it. So who lost that one? This guy. Anyways, it's a gamble at this point, and I think that's what people did today, and paid off for a lot of people. Good for them. Obviously, there's liquidity hunters everywhere they go. People see opportunity. They're probably wide-eyed looking at where it was last night. They're like, you know what, fuck it. People are probably going to be shorting this. Let's squeeze it. And they did. Made some money. Good to know that there's still money to be made in this failing market. Moving forward, I do want to look at the DXY, because this hourly chart for the DXY, or not even the hourly chart. Let's look at the 5-minute chart for the DXY. We're going to go to 7. Here it is. There it is. See where it's bad?
Uh-oh.
Right there, this massive red candle. So this is the CPI came out. See 1230 UTC. Shot all the way down to 101.783. Shot all the way back up. Look at this. Someone saw the headline number and said, oh, it came in under expectations. That's great. Let's fucking sell the dollar. And then someone realized, oh no, core is still extremely high. Let's not short the dollar. And then it went up to a reasonable value, and now it's up on the day, 0.09%. So everyone that was shorting a dollar, you get what you fucking deserve. No, I'm just kidding. But it's absolutely wild to see that the dollar moves that much on CPI data, only to rally into the next CPI print to drop, only to rally into the next CPI print. It's a never-ending game. The dollar is strong, guys. I can't say anything bad about it. If we look at I mean, how can you say anything bad about it when it shot up that much today after shooting down that much that quick, right? We're still on this channel on the weekly. We see that we're progressing pretty well. Let me just pull this up right here. Our next target is obviously this 50 moving average, right? We're getting closer. I don't know if we're going to do it this week, but I do think that we are going to be testing that. And if we do test it and we do break above it, I think that we are probably going to see a pretty good move to the upside. Again, we're putting in lower lows and lower highs. We got this double, it's actually a double bottom or triple bottom down here. Then we found major support down here off this 200 EMA and just show that we have so much room more to grow. I think that we are probably going to be heading towards 105.651 if we get above this 50 moving average. Start closing above 103. That'd be absolutely ideal. But I do think that the dollar is in a good place. We look at the monthly as well. I mean, there's plenty of room to the upside here. The question is, though, if we do start to see a collapse, I do think that the dollar is going to take a bit of a hit. That's just how it's been in recessions prior. And I think that a lot of that, people are going to start taking money from the dollar and start moving into gold and silvers and other precious metals. It just seems like that's a safe bet for a lot of people when times do get tough. So I don't know how much the dollar is going to push up from here. I'm just keeping that in the back of my mind. I think that, you were talking about it today. Gold is at a pretty decent level right now. I've been looking at it too. ETFs, any exposure to gold, I think is a good, safe bet if we are anticipating there to be financial hardship. So with the dollar, I think for the time being, there's plenty of room to the upside. I'm not short the dollar at all. I wouldn't short the dollar here, especially with interest rates continue to rise. I think that we're at a pretty safe place for this to continue to go. And today just proved that, okay, it's pretty resilient right now, especially amid, inflation, which is increasing.
Okay. We also talked about oranges.
Oh yeah.
So
I
we're
don't
going to be commodities guys now. So I'm currently Googling to see if I can find us a good ETF where we can trade oranges. I can't really find one. Are you sure this Brecky one isn't real?
Maybe it is real. I didn't like how it looked though. I couldn't find it.
Because I'm seeing an article about it on Bloomberg.
Oh, fucking Bloomberg also is talking about vibe sessions, brother. I don't know if they're going to be.
Well, that was Bloomberg opinion.
Oh, yeah. Good thing they have the opinion there. Otherwise, it'd be fucking, would not be fact. I'm going to pull up what do you call it, the JPY real quick, the yen against the dollar, because this is absolutely insane to me how it's 144 yen to the dollar right now, right? It's an insane amount. I think that this does need to correct considerably, considering that inflation is rising. I tweeted out this morning that the Bank of Japan doesn't really know what it's doing right now. It's kind of petrified. It's like frozen still, not sure what to actually do. When they have that much debt that is from the US and their dollar is absolutely being devalued, and they have an aging population and inflation starting to pick up there, they're going to have to, they're going to be forced to do something. They can only buy so many, I think they were buying tons of bonds unscheduled from the Bank of Japan. They gotta do something soon. So I do think that this is going to start to decline here. From where it is at 144, we got to start seeing the yen have some strength, which in turn would absolutely destroy a lot of treasuries here in the US, because we'd start seeing a lot of those being sold off because the yen carry trade wouldn't necessarily be as profitable as it once was. So I'm keeping an eye on that. I think the Japanese yen right now is absolutely something that Japan does need to defend. The Bank of Japan needs to do something. They haven't done it yet. So we'll keep an eye on their CPI data as much as we're keeping an eye on the data coming out of China, because deflation is just as bad, if not worse, than inflation. And the fact that, two largest international holders of US debt are both facing some pretty bad times ahead, I would anticipate their currencies, they wouldn't want them to absolutely devalue. So they're going to do something, which in turn would impact the markets here in the US.
Okay. We're coming near the end of today's show. Is there anything else you want to discuss before we wrap it up? We're seeing, kind of things are just kind of, we're actually taking a leg down in the stock market as we speak. The Dow is giving back more of its gains, now just up 0.19% on the day. NASDAQ up 0.2%, S&P up almost flat, basically. So we're seeing some movement down. Same thing in crypto, a little bit on the way down. It's just, this market's weak, man. People are not wanting to deploy capital into it. It is weak. It's starting to crack. And once it does, fucking look out below.
Yeah, man, I said I feel confident saying that this is the top for these markets. Again, I'm just going to pull up these charts real quick. This is the Dow. Look at this pink line right here. I'm going to make it a little bit bigger for y'all. I don't think we're going to break through it. Again, we got rejected at this trend line up here. I think that's a lower high. And again, with the monthly stochastic RSI being overbought, tells me that there's room to the downside here, right? I could do the same thing if I look at the NASDAQ. Same exact thing. Probably going to be testing that 50 moving average down here. But again, I think that we're in a pretty bad place for a lot of these stocks, especially anticipating what's coming. Again, these technicals mean nothing when we're in absolute economic crisis mode, right? If we look at the S&P here, S&P, what the fuck is going on here? This is a fun one. I haven't cleared this chart up in a while. Let me just get rid of some of this shit so y'all can see.
Yeah, July definitely marked the local top for these.
Yeah, and I'm looking at this right here.
I'd be happy to bet someone on that.
We're getting bearish engulfing candles, right? And usually when we see those, the price does come down. And we saw it here. We saw it here back in January of 2022. We got a green candle up, and then we got a bearish engulfing down. And you could argue, say this, we're going to get another U pattern. But yeah, if we do get another U pattern, it's probably going to get rejected on this trend line once again, right? Until you break the trend, this is going to be your continuation pattern pretty much for a lot of these indices. Again, the dollar is strong as could be, which is going to hurt stocks in the short to midterm. Oil continues to be fairly strong. Commodities are pretty strong. I think a lot of money is going to maybe start moving into some of those too, which could definitely hurt some of the equity market. I just don't believe that there is more upside for the indices, whatever it is, themselves. I think both are correct, if I'm not mistaken. I think I'll just go with indexes because I don't sound like an asshole. But
indices.
See, I don't like how that sounds. Even though I know it's right, I don't like it. But yeah, 100%. I think that we're in a place.
At least you say basis points and not bips. Then the people who say bips instead of basis points sound like total d-bags.
Well, yeah, because they are.
Because they are.
But yeah, this is so that's what I see with TradFi. I do want to look at my boy CZ. I've been doing so much reading on this guy. I'm like, that Charlie Day. What do you call it?
You're obsessed with CZ. You're like Steve Buscemi in Happy Gilmore or Billy Madison with like his name on the wall, and you're gonna like put lipstick on and cross his name off. Like it's your obsession with CZ is getting bored. Like you might be getting hit with a restraining order soon.
I mean, that's fine as long as the DOJ hits him with something else first, right? That's all that matters. But I've been looking into this guy. Absolute scumbag. That's my opinion. I have no facts to prove that he's a scumbag other than the evidence that makes me believe in that opinion. But I do want to talk about something that I was reading. It was Brian Brooks. Do you remember who he is? He was the guy who testified before Congress back in December of 2021, I want to say. And it was him, SBF. Pretty much he was a comptroller of currency under Trump when he was in office. And so back in 2021, Binance US hired him to be their CEO, and he left 3 months later and he resigned. And when the DOJ charges or the SEC filed came through, I was reading a CoinDesk, or I think it was CoinDesk article, and it said that he felt that he wasn't in charge there. So there's a good chance that Binance US was just an absolute like ghost arm of Binance itself, and CZ was in charge of a lot of that stuff. So it was pretty much just a way into the US market to get off of the USD. That's one thing I was reading. It's absolutely insane, but that's just a piece of news that I was researching. And there's a lot of stuff that comes with BAM Trading and the companies that he set up where he was kind of in charge of them, even though he wasn't supposed to be, and he was making a lot of decisions. But I just want to look at this pattern that we've been seeing for BNB, right? We got this massive leg to the downside. We shot down, and we've been trading in this kind of a triangle. I've been calling it a symmetrical triangle. I do think that it is a bear pennant. The main reason I think that it's a pennant is because we're just coiling up here and we keep hitting this 50 moving average and we keep getting rejected off of that on the daily, right? And right now, I think that we are seeing a little bit of a break. Yeah, see, we're breaking to the downside, which it usually gets eaten up and shot to the upside. But look at that stochastic RSI right now. It's completely overbought. There is a possibility where I could see this thing absolutely just dropping down and testing this 210 level, which I think that Binance would probably be printing stable coins, or someone would come in and try and save this at some point. I don't know how much collateral that BAM Trading has, and whether it's Sigma Chain or any of these other side projects that he has, similar to how Alameda Research was owned by FTX, even though they weren't supposed to be part of FTX at all. I think that there is some type of collateral that is here with BNB where they're going to try and protect that price level. Again, I have no proof to prove that. I just know that from everything that I've been reading, there's a good chance that we could see something, if we start to see at this 210 or 220 level, it starts to get bought back up. There's a good chance that that is an absolute fail safe. So if that goes through, game over. I think that we're going to be seeing it drop a lot further. But if you do start seeing people buy it back, might be an artificial buy-in just to protect the price, to keep people from being margin called or liquidated. So keep an eye on that. But this pattern tends to be bearish. It's not a symmetrical triangle. I said that a few days ago. I just wanted to correct it. I do think that this is a bear pennant, and those are continuation patterns. And I think a lot of the technicals are lining up. But again, never underestimate a squeeze. These things happen all the time, and I'm still open to a possible squeeze because I think that markets know that the end is near, and we're going to start seeing a lot of this turnaround it's going to turn south fairly soon, especially in TradFi, in my opinion.
Okay. I think that is a good place to wrap it up. some PPI data coming out tomorrow morning. I always feel funny saying PPI, but whatever. Producer Price Index tomorrow morning. The PIP's coming out tomorrow morning.
Got to take a
little bit of data there. Don't think it's going to move things too much. We'll be back to close out another fun-filled week in the market. Same time, same place, everybody. Thank you for being here, guys. Bundy, thank you for joining us. Randy, Ace, Mr. House, the usual crew. We love it. Do us a favor if you have not yet. Hit that like button. We know that all of you guys watching right now subscribe, but anyone new, please subscribe as well. We hope you enjoyed today's show. We're here day in and day out trying to deliver some educational and at times entertaining content. So interact with this show, share us out on social media, all those things. Have an awesome rest of your day, everybody. Stay safe. We'll see you next time.
Take care, everyone.